What's up, good people? What's up? Let me cut this down. I'm screaming. What's up, good people? As you can see, I got the family in the house. Wow. Let me take care of this. I see a problem. Good.
There we go.
There we go. That's a little better. All right, good people. Sorry about that. This MacBook Pro want to take over. What's up? What's up? Let's do a mic check. We all here. We all here. Let's go. Let's go. Let's go. Did it start yet? We starting right now. Hey, I'm just coming on with everybody, all right? We got Stock Mo down there to the left. We got Keenan Grace down there to the right. And
Let's
then
get
we're
it.
going to introduce somebody else a little later. But hey, Stock Mo, tell the people hello.
Hey, everybody. Hope you're having a good day. And like I always say, stick around because I think you're going to like what we got for you. I'm going to tell you, Larry Keenan, we got a lot of good news out there in my mind. And I got a lot of historical data today to hopefully, enrich us all as we move forward because the worst might just be now. And then we could see a lot of gains moving forward. We'll talk about that, though.
Yeah, let's talk about that, man. It's the FOMC meeting happened,
That's right.
and we're gonna dive in and dissect that. Keenan, what you got to say for the people, for the good peoples?
What's going on, everybody? This is Keenan Grace. You already know what time it is. Can I see some likes go up in the building for Larry Jones? Shout out to Mo. It's good to be back with you guys. We had the FOMC meeting. We already know that the Fed raised that rate by 0.75%. We got to talk about that today. We got to see, what usually happens historically after these things happen, right?
Yeah.
What does the market anticipate for the future? We got to get into all of that so we can know how to move forward correctly and accurately.
Yep. So hey, we're not gonna prolong this. We're just gonna get right into it and chop it up and go from there. I do have a guest in the house. Let me just show you guys. We got stocks with Josh. Y'all say hello to Josh. There we go.
Hey, family.
Look at
Let's
this.
go,
Look at this. They
Josh.
already
I was going
know.
to say, welcome to the family, Josh.
Yup,
you.
look at
Thank
that.
you.
Somebody already said somebody already beat us to it. So hey, listen, we're gonna get right into it. Let's talk about what happened at the FOMC meeting. I made a video this morning. I'm not the only one, so I'm not astronomist, but I did say that the Fed needed to. I didn't know if they were going to do it or not. I did say the Fed needed to go up by 75 basis points. And I said they need to do it twice. And then I also said that they also need to follow it up with a 50 and a 50. Well, guess what they're talking about doing right now? Doing exactly that because we now see two things. Number one, the Fed was behind. Inflation was just ridiculously like a racehorse that broke out of the barn, right? And the Fed was moving too slow. Inflation was moving at a faster rate than the Fed was. Now the Fed had to go more hawkish. But
Mm-hmm.
what did the market say? And I always say, let us hear what the market said. The market said that we've been waiting on you, Mr. Fed. We've been waiting on you to do it because think about this. Everybody, in 2008, all these YouTubers wasn't out there. There was no Stock Mo's and Keenan Graces and Meet Kevins and all of that in 2008. It wasn't this big. So there's more of us, and not just us, but you guys have the tools to say, hey, this is what everybody is saying. So you and I are the market. That's our money. And then, of course, you got big money, okay, institutions. So now everybody knows by now that the Fed needs to be more aggressive to get this inflation under control. So the market did what? It priced it in. And so just because there is green today, the market just showed, yep, this is what we needed to do. But I do see a roller coaster coming. So I'm gonna start with you, Keenan, and then we're gonna throw it off. You throw it off to Mo. Go ahead, Keenan.
All right, I got you. So everybody take a look and take a hard listen to this. So the last, I want to say 8 FOMC meetings. This is the Fed meeting, right? The exact day and a little bit after, a few days after, maybe let's call it 1-2 days after, we had a rally. Bloomberg, they call it the FOMC rally.
Yep.
right? However, just know it is generally short-lived. So that means that
Yep.
we are going to see some rise in prices in the stock market as if nothing is happening, right? But people, what they're getting is that fear, uncertainty, and doubt. They got some certainty now. The
Mm-hmm.
certainty calms the waters on the stock market. But
Temporary.
you got to understand that new uncertainties lie ahead. And then that's going to just cause the rally that we're having right now to sort of sink down and calm back down before people get basically, let's put it just like this. I want to say July 13th, we're going to get the new CPI data. That's going to be the next major catalyst, right? We're going to get it at 8:30 a.m. Basically, yeah, I want to say it's exactly July 13th. If you have that, let me know in the chat, family. But yeah, keep it going. 8.6% is the overall inflation number. What does that
Mm-hmm.
mean? That means that this is the number that we got to get lower and lower and lower. Long story short, so we can get inflation all the way down to about 2%. This is what Jerome Powell, who's the chair of the Fed, said that he wants to see. So if we get it all the way down to 2%, meaning the inflation numbers, right? It might take until 2024, believe it or not. This is what they're telling us. But we want to see these numbers start to come back down. And if they start to come down, this would signal that we are either at or close to the bottom of this, what they're calling a recession. That's what I got for you.
I like that. I'm going to follow up on that, Kenan, because if you look at what he said there, perfect. And then move forward. If we see that 8.6% inflation rate in May, and we go down in June, maybe we don't. Some people calling for 9% in June, and that's going to top us out, hopefully, and we go down. Or maybe we topped out in May. History over all the big inflation periods since World War II says this. And this is key. If you look at all of them combined and you say, when was the worst of all of them? And then when did they start coming back down? Once you hit a top with inflation, the market in general, on average, returns 13.2% over the next 12 months. So
Say
if
that
the Fed
again.
has,
Say that again, Mo.
so
Say it again.
so if we have hit the top, say May was the worst inflation month, that is it. We start coming down. Maybe it's 8.4 and then 8. We know the Fed said they're going to have it a lot lower by the end of this year, a couple percentage points. Whenever the top is, over the next 12 months, history has shown us all the way back to World War II, modern times, that the market will return us on average 13.2%. It's the FUD, it's the fear, uncertainty, and doubt, negativity everywhere. People are losing money. And that is when it turns. And that's when the big money scoops it up and says, okay, inflation's starting to get taken care of. We're starting to see it come down. Let's get in there before the retail investors. Not this time.
Right.
We're going to be in there. We're going to be
Yep.
ready.
Yep. Hey, you guys, y'all already know I'm finna do a station break early this time
Yes.
because I'm looking at this number. We got 1,750 people watching and we got 520 likes.
Oh, we got to get that up.
Oh,
We
yeah.
got to get that up.
Good people.
Hit that like button.
Really, y'all? Come on. You got Uncle Larry in the house. You got Stock Mode. You got Kenan Grace. You got Stocks with Josh sitting back in the cut. Come on, y'all. We about to hit y'all with this info, man.
Yes.
We trying to bring the fire, man. Come on, let's hit it. Let's hit it. I'm gonna do a refresh. Come on, 570. If you haven't hit the like button and you watching 1800, hit the like button. It's coming up. It's coming up, y'all. Hey, I also want you guys to do this. I'm gonna say this 3 times throughout this video, and we're gonna make this one shorter. In my description below, I got 2 links at the top, Weeble and Mumu. I'm gonna let Mo talk about the links. Under those 2 links, I have these gentlemen's pages, their YouTube pages. I want you guys to go to Kenan Grace. My link below is the 3rd one down, Stock Mo, Kenan Grace, and subscribe. You can do that during this video and come back, but I want you to do that. I'm gonna say that 3 times because we support each other, because we are positive. And I'm telling you guys, we don't just talk when we're doing this live for you guys. We talk all of the time, we text all of the time to see how we can better serve you guys, okay? Mm-hmm. And I also have Stock Josh's under there, his is under theirs. I want you to go and subscribe to these gentlemen pages because I'm telling you, I'm Stock Mo is making Stock Up with Larry Jones a better trader. Kenan Grace is making Stock Up with Larry Jones a better trader. I'm telling you, I've been doing this for years, but I learn from others, okay? And I'm just encouraging you guys to do the same. Never, I don't care how good you think any of us are, never take one person's word as the absolute Bible, okay? Treat YouTube like TV. You don't just watch one channel, all right? All right, so hey, we coming up with, thank you guys, thank you. I see these likes up now. Now we talking.
Yeah.
All right, so listen, here's what I want to say to you guys to look out for, just like Kenan said, right? Kenan does the same thing I do. I look at every Fed meeting and I look at what happens afterwards. I said it this morning, I'm going to say it again. There was movement, just like I said it was, not because I'm so smart, because I just watched every Fed meeting, right? They leaked the numbers the day before, which they did. They leaked it. Wall Street Journal, right? This is how Fed Powell works, right? It's called the rubber band effect. You want to stretch that rubber band or a string, and then you want it to snap back. So he released the numbers yesterday, right? Comes out in the Wall Street Journal. They literally said it with certainty, right? Then he releases the numbers just before he go live. I played it for you in real time, CNBC, 75 basis points, right? Market reacts. The market reacted from yesterday's news. It reacted again. Then he comes on and speak. The market moved like 200 points while he was speaking, right? Then it reacted again when he takes questions. Just watch these moves, right? He took questions. The market react again, went up, right? 500 points, right? I'm talking about the Dow. But I want you guys to prepare yourself for this weekend. I want to say this at the top of the video. What normally happens, that I pray don't happen this time, is there's a state-by-state Fed that always talks on Thursday or Friday that is even more hawkish, right? This happens every time. Hey, thank you for, every time I see that, I'm going to say thank you. What happens is a state-by-state Fed will be talking, right? And what will happen is they'll generally more hawkish than Jerome Powell, which causes the market to move negative, right? And you'll hear this. This happens every time. It's like a game now. Monday is a holiday. The markets will not be open on Monday. It's Juneteenth. Google it and see what that's about, right? So Tuesday, after people have had the weekend to absorb everything, remember, whenever the Fed talks, it takes the market a few days to absorb what it really meant. This happens every time. Tuesday will be a better gauge of where the market is. Not today. It overreacted when it sold off, and I believe today was an overreaction green. What you guys got to say about that?
So I got something for you on that too.
Yeah, I was going to say, go ahead, King.
I totally agree with you. You got to really think. You said something earlier that was a key word. I want everybody to kind of just pin that in your brain, and it's rubber band. When you pull a rubber band, it's going to snap back the other way. And the stock market is a lot like that. And the Fed, they know, we're talking about the Federal Reserve, right? They know that the rubber band is like that. And lately, they've started to use some tactics that I think are the same tactics that happen in the media. I'm talking about movies and things like this. People will go and watch a trailer of a movie if it officially comes out. But you know what people really cling on to? Rumors, leaks, things like that. People really, really cling on to those things. If you heard a new Marvel movie was coming out, you might go watch the trailer. But if you seen a rumor about it, some drama, yeah, everybody gonna go check that out, right? And then it would be great promo, but it would get the information out without being official. So then they could change their mind in the background if it didn't work. Now let's put that into the market, how we're looking at it now. The Fed, they know that on the stock market, a lot of these institutions, I'm talking about BlackRock, which is the largest holder of stocks basically in the world. I'm talking about Vanguard, second largest, right? Asset management company. They have algorithms, believe it or not. It's called trading out. It's algorithmic trading. They have algorithms that literally scrub through the internet and they look for keywords coming from Bloomberg, coming from Reuters, coming from all of these different kind of main sources. And once they start to see a high volume of, let's call it 75 basis points, right? They start to see these high volumes, then these algorithms will sell. They'll sell some of these stocks that they have and cause the market to come down. What the Fed can do to get this out, this information out, is like leak it, right? They won't officially come out with it. They'll leak it a few days. And you know what? How about we just let Reuters know? We let whoever else know. They leak it. And then next thing you know, the market a few days back crashes down. So then they get to come and be the heroes and tell you officially, yeah, guys, they already reacted to the 75 basis point thing. That was that crash from a few days ago when you just started hearing about 75 basis points, 75 basis points. It was all over the news, right? And now officially we got the confirmation. Confirmation calms the waters. They didn't have to surprise us today. They just told us what we already knew. So then when you start to hear the rumors, I want to call it a week ahead of the next meeting next month, then you'll get a real idea. Is the market reacting poorly to this? If so, and it already happened, when you start to hear the rumors, then they'll just do it. The market already reacted to it. It's called being priced in. You got to, on the stock market, I hate to say it, the institutions, they want you to believe that they are not trading emotionally and things like that. But let me tell you right now, it's a lot of emotional trading going on in the market in general, where they're just looking at rumors and they say, okay, how are we going to react to this, right? How is this going to look? Public perception. It's a big game, family, and you're playing. And I want to say this, just on a side note of it being a game. I said this on my Twitter, and I just want you to understand and know that if you have joined the game, that is the stock market, that is trading, I want to give you a round of applause. I appreciate you. Why? Because you have gotten off of the bench and into the game. It's not always easy, but you decided to do it anyway, and I got to just salute you for that. I appreciate y'all.
What you got, Mo?
Yeah, I gotta tell you, I agree 100%. Right now, it might be one of the most difficult times out there to invest because you're seeing the market come down. But do you want to buy a house that you're going to be in forever when it's cheap, when it's on sale, when you have fire sales? Or do you want to wait until the house is 20, 40, 50, 100% more expensive? It feels nice because all the houses around you are going up. But let's be honest, if you actually had a chance to look back in history and I show you the cycle of the market, you're going to want to buy at the lows. Well, guess what? That's where we're at. Now, we don't know how low it's going to go, but I can tell you one thing. We're not going to go much lower, in my opinion. People always say, how much lower you think we can go? I always thought maybe 10% off of before today. I thought 10% lower would probably be a max. But even if I'm wrong, let's say this. Over a 20-year period, there's never in the history of the market been a time that you haven't made money. Overall, the market always ends up higher. You know, it's almost the same for 10 years. So if you have a long-term outlook, this is the time to be taking advantage of it. Now, make sure you're picking good, solid stocks in case we do head into a recession. I'm on the side that I do believe we'll see one in 2023. I believe we'll see one late. I also believe it's going to be very, very mild. I know other people are saying, oh, it's going to be major. And I know the Fed came out and thought, hey, we're going to try to avoid it. It's going to be a soft landing. Not as soft as we wanted, but we're going to avoid the recession. I hope my everything in my portfolio, Jay Powell does it. I hope he comes through. We have a soft landing. We avoid the recession, and we have a little slower growth, but we have growth moving forward. I think it was like 1.7 GDP growth this year, next year, and 1.9 for 2024. That starts to move up. I think that's where we go. There's a lot of other things out there to consider, and I'll just tell you this. Keep this in mind. The U.S. is not the only market you can invest in. Remember, and this is a weird thing. I haven't heard anybody talking about it. I do a big video tomorrow on this. I talk about this in my morning video tomorrow. You're going to want to check this one out. More importantly, for Larry, hit these like buttons. Take 1 second, hit the like button. Let's get this thing up to 2,000. We got 2,700 people here. Let's get this thing over 2,000. And of course, like Larry says, hit those subscribe buttons for everyone.
Yes.
I think a group of minds is always better than an individual. An individual can lead you hopefully to the right way, but a group of minds, I always think we're stronger as a team than we are as an individual.
That's
now,
true.
With that being said, here's the big thing. You haven't heard this out there, but pay attention to oil. Oil. I'm not talking about the oil on the market. I talk about that all the time. I'm talking about Russian oil. Russian oil. I just checked it out. I've been watching it. You guys know I have a lot of money, well into the 6 digits worth of energy. This is one that has my attention. Russian oil is trading to China and India on a 30% discount. If you have, let's think about what makes up services and goods. One, you have the raw materials, the labor, and an energy. If energy, and you're making your goods and services at a 30% discount and you already have some of the cheapest labor in the world, how are you going to be in a competitive stance against the US, other Western nations, and other nations around the world? You're going to have a step up. And unfortunately, India and China are both getting that. They're buying all the oil they can get. They're shipping all they can. They can't get enough because of that discount. That is something that is huge. I know it helped Germany against the EU when they all kind of compete. Germany had a really good price on energy, and that really gave them a step up. Now we're going to see what happens with China. They're doing quantitative easing. Right now, the U.S. is tightening. We're going through a tightening cycle. Rates are going to go up. Balance sheet's going to drop.
Explain what easing and tightening is, really quick.
Okay, so tightening is what we're doing now. You're seeing the Fed raise rates. You're seeing the Fed not do the bonds. They're seeing that go down. They're selling the bonds, not buying them. And that's going to be tightening. The market, it slows economies down. On the other hand, China announced major quantitative easing. That's what we did in 2020 in the US. You saw what happened to the market. Tech plays ran up. A lot of plays ran up. You couldn't miss. Everybody was a hero. But did they do this kind of research? So when you see China doing the quantitative easing, getting energy at a 30% discount, and they got some of the cheapest labor in the world, I don't know about you, but people say, hey, NEO's up from $12 to $20. It's not because it's NEO. It's not because their numbers were through the roof. Their numbers were terrible, but they will do better. The reason they're up, and a lot of their companies are up over in China, is because of the quantitative easing and that energy. Smart money's moving there. There's been no reason for this stock to go up that much. I'm happy. I got a ton of it. But the truth is, it's the quantitative easing and the energy prices at a discount with that cheap labor. They're going to crush it moving forward. And it's not just NEO, because we know there's a lot of tax subsidies and all these other things, tax credits and subsidies they're doing to switch from ICE vehicles over to EV vehicles. I think it's like $1,500 to do that. But there's a lot of other things going on. And so pay attention to that. And I'm not telling, hey, sell everything out of any Western country, Canada, US, UK. I'm just saying, pay attention to some of the stocks over there, Alibaba, Lee, Xpeng. There's a lot of JD.com. They could start to move. And if you start to see that pattern, just know you heard it here. And you could take a little piece of that for diversification. Mm-hmm. India is the other country, too, that I would tell people to pay attention to. You don't ever hear people talking about it, but there's more than one market in the world. It's not just the US, China, India, UK, Germany. They're all over. And so sometimes you can make money in other countries when a certain country, whatever country, is not doing as well, and then rotate back once the Fed does their thing. So I'm kind of looking at doing some of that. So that's just my take.
Hey, I'm going to have Josh talk about that. I want to thank James Stone for his blessing, his financial blessing, and Miss Pooh. I forgot your name. Thank you for your super chats. I appreciate it. Much appreciated. You know what? I was going to save Josh for the end, but I want him to, I think I saw my wife's name. Somebody else in there got my wife's name. But anyway, I'm sorry. When you see your honey name, you'd be like, but anyway, I want Josh. Hey, everybody say hello to Josh. I want to bring him in on what you just said, Mo, and about Alibaba in particular. Now, it is a Chinese company, right? Let me say this first. 1 minute for Josh. It is a Chinese company. I wholeheartedly agree. They're doing quantitative, and Josh is going to speak in a minute, and then it's going to be back. We're going to just it's hard for all of us to talk at the same time. I was going to bring Josh in at the end, but I'm going to just cut him in right now. But let me talk about quantitative tightening and quantitative easing, because we're just concentrating on the Fed rate hikes, but I want you guys to know the power of the easing and the tightening. One of the reasons why we are in the trouble that we are is because of excessive quantitative easing, okay? So just think about a balloon full of water, right? And just think about an empty balloon and you start filling it full of water. That's actually quantitative easing, right? And the balloon gets full and it's ready to burst. That is our economy. It got too full and it was ready to burst, meaning we're going into a recession. So, and that's inflation, right? So how do you fix the problem? you do what's called quantitative tightening. So just imagine you're squeezing the balloon. Now that's quantitative tightening because you want to get some of the water out, right? So you put a pinhole at the bottom and you're squeezing the balloon. That's quantitative tightening. So you got to pull money out of the system. But that's not working fast enough. So you do what? You also increase the rate hikes. So that's a pinhole at the top. So you got quantitative tightening and you got raising interest rates. Those are the two things that is necessary to combat inflation. Not limited to, but these are some of the tools that the Fed uses to combat inflation. Because, as a matter of fact, let's take a look right here. And I want you guys to see this. This is very important. If you look at this right there, you could see a 30-year fixed mortgage is 6.28%. You see that? Now, I don't know about you guys, but mine is 2.7. My friends is 2.5. So compared to how much you make and the interest rate on a 30-year fixed, it is more expensive to purchase a 30-year fixed mortgage on a new house or any house right now than it ever has in the history of real estate because of the inflation problem and what the Fed has to do. So a lot of people said, hey, we're not in a crisis, right? And so, yes, because we still have job loss and we still have housing loss to come. Well, I got news for you. The houses just flip on a dime, and so does jobs flip on a dime, because I don't care if you got 11.6 million unfilled jobs. Guess what happens in one quarter? Millions of those jobs go away, not because they're filled, because the people that posted the jobs take those down. All right? And so it turns really, really quick. But there are things that will happen leading up to, right? So I want you guys to get your thoughts together on what I just said. Kenan and Mo, stick a pin in that. And I'm going to bring Josh in. You're going to have to talk loud because we're going to share this mic. Hey, let's see some coffee cups. Let's see some mitts. And let's see some Tesla cats as we welcome Stocks with Josh.
Hey guys.
Welcome, Josh.
I
Welcome.
Step back and talk about what Stockmo said regarding the Asian and Indian markets. I completely agree. I've been looking at that. I think they oversold off harder, sooner, and they were really a precursor to some of the fall that we've seen. And now they're actually having a little bit of a rally. So I actually think that I don't think the American market has gotten to where it needs to get before it can go back up. But to me, that's actually an early signal of buying activity.
All right. So I asked Josh to bring up. Let me see if I can bring your charts up. There we go. All right. So
well, do you want to talk about Bitcoin?
You know what? I want you to just talk about it because I got to situate it where you come to the front.
No problem.
And so what I want Josh to do real briefly, I want you to talk about support levels on Bitcoin and support levels on the S&P as the charts show.
Okay, well, obviously we're sitting on a support level. The most important support level that I've been watching and talking about is the 200-day weekly moving average. Every single time Bitcoin has come back to that, it has been a support. If we look back at this bull rally and the last two, it actually formed the bottom. If we go back to, it came down, hit that 200 weekly moving average, moved across it for a number of weeks. Here, I'll just point that out to you guys right here, okay? So here was two bull runs back. It came all the way down. It was moving sideways, consolidating. It fell off the cliff and it stopped. It got support at this 200-day weekly moving average. From that point forward, it really began to rise. I want everybody to take a look at that. So it then moved sideways and upwards until it went parabolic in the next bull run. And again, after it hit that high, it came back. It again touched the 200-day moving average, and that was the lowest point that it would go before we saw this massive run from 8,000 to 64,000. So guys, let's look at where we're at. We have yet again hit that 200-day moving average. Okay, so I think that's extremely important. I'm not calling the bottom. I'll make this comment. We talked about how Asian markets have sort of maybe are preceding an American market bull run. But let's talk about Bitcoin, how it has sort of moved away from coinciding with the NASDAQ the way it had for a long time. And but could it be possibly preceding a turnaround in the markets? You follow what I'm saying?
Yep. So now talk about, did you talk about the S&P?
I'll get, before I do that, I'll just
you
give
know what,
you guys.
Let's save that for the end.
Okay.
We'll talk about S&P. Just give us 3 levels of support that crypto could come down to.
All right. So we're sitting at a level of support right now. That's between the 20,000 and 22,000. I see the next level of support actually around 16,750. Some people are calling it down to this other peak around the 14,000 mark. I'm going to suggest to you that there is a level of support beneath the one that we're at now that would be around 16,700. We have 1, 2, 3 touches there. So that's quite a bit of support. Now, if we did break that, then yes, I'm not making strong predictions for everybody. I personally believe that when in the past we hit this 200-day weekly moving average, we broke through it temporarily, but we came back above it and we never went below it again. We've broke through it right now. It is very possible that we will come back up and move along with it. If we don't and we break down, our next area of support in my mind would be the 16,700.
All righty. All right. Mo, what you got to say, man?
I love that chart. First of all, welcome, Josh. I love having you on. That was very, very interesting. As everybody knows, I'm big on Ethereum, and I know a lot of people out there are wondering about crypto in general. So I'll give you a little my thought on that. There's a lot of things coming up, and it doesn't matter which crypto that you are particularly. Are you in Shiba Inu? Are you in Ethereum? Are you in Bitcoin, Cardano, Solana? It doesn't matter which one you're in, because big things are coming. A few things. One, the Ethereum merge. I know some people out there, they're betting against it. They don't want it to succeed, but they're in other cryptos. If you're in an altcoin, you want this to succeed. If you're in Bitcoin, you want this to work. You don't need more negativity in the crypto space. Josh nailed it. We're down there at that 200 weekly moving average, and it's huge. It's awesome that we're getting down there, that hopefully support, and we'll see if that's the floor. But we've already seen, and I talk about this as well, a bull run. If you go by the official numbers with Ethereum, we were down over like the last 5 days. It was like almost 40%, but we bottomed out at 1,000 something Ethereum. We're now back up over, as I look at my computer, we're up to 1232 at this particular moment in time, over 20 something percent up. Crypto is not for the weak-hearted, because I'm going to tell you, a 20% move higher is an official bull run. And so we have already went through an official bear market over the last few days. And now technically we are officially on a bull run. And that doesn't mean we hit the bottom. Doesn't mean we can't drop. Anybody that's in crypto knows this thing can move 50% in any given day. Then one big bad piece of information, a exchange closes down, and we're seeing a lot of issues out there. Bad news can come, and it comes by the multiples. But my opinion is the merge goes through this year. The market itself, the stock market, which we know crypto is now 30 to 40% correlated to the stock market, you're going to go ahead and see that rally by the end of the year. I'm still calling for mid to high 4,000s for the S&P 500. And remember, we're only at 3,700 right now. So that's a big gain. Honestly, I'm looking at 20% pop or more from today. And that's my goal. It doesn't mean it's going to happen starting today. It could happen Q3, Q4, but it's going to happen quick and fast, and it's going to drag along crypto with it. But, you got Ethereum out there. It's going to do the merge. We got the smartest brains in the room working on the merge. They're taking their time, and they're going to do it right. And this is big for others that might want to go from proof of work to proof of stake. The rewards are going to be big, 7 to 12% for those who stake, plus the appreciation in price once we get through it. Some calling for even more down the road. Deflationary asset. Lots of good things are going to come from this. It drags everything up with it. and that includes Bitcoin and the altcoins. If we see a successful merge, the markets recover a little bit, we get inflation topping out, coming down, put it all together, I'm telling you, middle of Q3 up through the Q4 is going to be big for this market. And that includes crypto and the stocks in general. That's my opinion. That's where I see it going. So hopefully that works out.
Are any of you guys buying Bitcoin miners? Not at this time.
No.
Nope.
No.
I do want to say this, though. Check
Go
this
ahead.
out. I'm looking at the charts, too, on Bitcoin, right? At the end of the day, you got to understand, Bitcoin and stocks, if you don't know, they're actually totally different. Stocks are backed by companies. Companies can bring in money and revenue. The simplest form of that is think of a farm. They actually produce things. They produce things that they sell, right? Bitcoin is solely moved off of supply and demand. That's it. That's literally it. If we break this 20,000 mark, which we have gotten so close to there, you're going to see the news catalyst. There are two kinds of catalysts that are generally moving the market. There's news catalysts, and then there's basically, like, you can think of it like just fundamentals of the company, just basically pumping it up. Or you can even say technicals, right? If we break the 20,000 mark, you're going to see so much news about how Bitcoin broke the 20,000 mark and got into the 19s that it's going to encourage the demand on Bitcoin to be just dropped off of the face of the earth, where we might see some support levels, right? Some weak support levels. Let's be clear. Not all support levels are created equally, right? This 20,000 one, this is a crazy, crazy level of support. However, we get down to the 18 to 16 to 14. These are weaker levels of support, which means if we break through the 20, we can just straight up power on through them because people will be afraid to get into crypto. Now, again, this doesn't mean run away, but it does mean when you see it drop to the floor, then you say, okay, this is my entry. You understand? So then we will realize that it's time to enter when you see it drop all the way down to the floor, and then you start to see it come back up and then pass through those previous supports, because previous supports are now new resistances. So once we pass through them again, you can say, okay, now I can start stacking my way up on that. But I really want you to keep your eye on that. We really, if you want to get into Bitcoin right now, you really don't want to see it break under the 20,000. I wouldn't even, just to be honest with you, I wouldn't even buy it at this point because it's sitting on that support. It could just break and then it would just drop to the floor. If you want a dollar cost average in because you have a 10-year horizon in plan, then it makes sense. Then it makes total sense, right? But if you have not gotten any Bitcoin and you, let's say you got $1,000 and you wanted to get some Bitcoin right now, not financial advice, I wouldn't put no more than $200 in that, right? 20%, I would go so light if I had $1,000 to put in Bitcoin just because we're sitting on the support. You might look back and it could be 30,000, right? And then you'll say, okay, it's headed back up. That's a stronger sign to buy it on the way up. You don't want to buy it on the way down. That's called catching a falling knife. And I'm not having that. Maybe you will. I'm totally not. Now, another thing in terms of crypto, Ethereum sitting on that 1,000 support line. It's almost crazy to even consider how Bitcoin is sitting at the 20,000 and Ethereum is sitting at the 1,000. And you ask yourself, how are these numbers so round, right? How are they so round? What's going on? The institutions have preset what they want this thing to be. Just think of it just like that. You can have companies put in, Kathy Wood said it, I want to say in 2020. She said if all of the Fortune 500 companies came in and they put, let's call it 5% on Bitcoin, on Ethereum will go to 20,000, Bitcoin will go to 150,000, right? So with that being said, you can see that they're just trying to see what happens. And once they do it and they start to move it back up, then we could get on board and then ride the wave back up. You don't necessarily want to ride the wave down unless you have a 10-year horizon on Bitcoin. We are approaching a crypto winter. That means that Bitcoin could fall asleep for, I want to say, 3 years, 4 years. And you thinking like, man, why didn't I buy Bitcoin 3 years ago, 4 years ago? We are now back into those times where you want to just see and potentially dollar cost average in, but do not rush. If you ever feel like you're in a rush, you are probably making the wrong decision.
Yep.
So yeah, I'll follow a little bit up on that though, if you don't mind, Larry.
I'll follow behind you.
Yeah, with talking about the crypto winter too, because you're going to hear that out there, headlines everywhere. Are we in one? I've already said it on my channel. I feel like we are, but it's going to be a condensed winter because when you look at some, I think like some of them are down 90-something%. That is what happened in 2018. And yes, I've been in crypto for 10 years. I've been mining it. I had fun with it. I was there in Doge on day one, mining Doge, and it's just a good time to learn some of that. But with that being said, if we are in a crypto winter now, what's going to break it? I have a feeling it's going to take 2024 if we don't see a recovery, 2024 has the halving with Bitcoin. That usually sparks the next bull run in crypto altogether. And so, worst case scenario, if you wanted to come up with a plan to try to dollar cost average into that 2024 period when we have the halving, and remember, the merge is a triple halving for Ethereum. So I like that, and that should happen by the end of this year. But combine that with the halving of Bitcoin in 2024, you got a good 2 years here of some pretty huge catalysts that start bull runs for these crypto, and that includes the altcoins, because once the big two dogs on the porch start rallying, you're going to see everything rally. And people ask me, what's the best one to get into? I can't tell you that, but I can tell you Ethereum outperformed 80% of all other cryptos, so I got my money on Ethereum. So I just wanted to add that in there.
Hey, look, listen, it's the whole thing right now. Wow, thank you. The best time to follow and listen daily sessions. Hey, I appreciate that. Listen, everybody's Bitcoin journey is different. Number one, it all depends on when you got in and what price you got it at. This is not one size fit all, right? With me, I'm like KENAN. There's all my altcoins. I converted them to USD, right? And did I say it right? USD
or USDT?
USD is what I converted it to USD, right? And to be honest with you, all during crypto winter, which I believe, like Stock Mo, I 100% agree. If your crypto's down by 90%, that crypto is in crypto winter. Whether
it's a blizzard,
it's a blizzard, right?
Yeah.
And so, like KENAN said, I agree with him too. At this current point, I froze buying Bitcoin because I believe it could go lower. Now, that doesn't mean it's going lower. So what I'm doing with my top 5, and I'm going to continue. I've been DCAing daily, and I was DCAing daily with Bitcoin. I just stopped my daily with Bitcoin because I'm trying to see what Bitcoin is going to do. But with Ethereum, I'm still buying daily, and my top 5, I said top 4 yesterday, but I'm in my top 5. And those are the only coins that I am getting into during this period, because these gentlemen can tell you now's not the time to be loading a crypto winter. And we're heading into a crypto winter, meaning I personally believe it's going to get deeper, right? Mm-hmm. So I believe we're in one, but it's just going to get deeper. And now's not the time to be chasing the new hot kid on block, new hype coins. It's just not the time. Yeah. Now, there's going to be a time where there's going to be a new Doge and a new SHIB, and it's going to go up 1,200%. They're coming, right?
In a day.
In a day.
In an hour.
Day, right? The next bull market, right, KENAN? I like that. In a day. Literally in an hour, you'll see it pop up. This coin is up 1,500% a day, right? That's going to happen again. I agree with Mo on the timeline. I believe that Q4 of 2024 will be in a new bull run, right? I believe it's Q4. Some people believe a little earlier. I believe by Q4 we'll be at a bull run. My year, and I'm going to say this to anybody that will hear this, whether stocks or crypto. If you look at most EVs, if you look at most emerging technology, and now with the way that crypto is correlating with everything else, if you look at the year 2025, most of these companies, new technology, will be in profit. EBITDA, profit. 2025 is the year. And what I'm saying to you, if you want to really create generational wealth right now, you need to see how much powder do I have? How can I DCA, dollar cost average? Now, when we say, hey, I'm not buying anything, that doesn't mean I'm not buying anything. If I these gentlemen all have portfolios that we do a little DCAing in, and that never stops, right?
Right.
But when you think you're at the bottom of a correction, at the bottom of a recession, and when you think you're at the bottom of a crypto winter, you better be buying. You better be accumulating, right? And how long? I would make sure that I have enough dry powder to last from now until 2025. I'm telling you guys, all of the trading you've done and all of the gains that you made is nothing, absolutely nothing compared to the money you can make right now.
Yeah.
So for some of you, it means getting a side hustle and creating. Unfortunately, recession brings job loss. We have so much to tell you guys. Recession brings job loss. I've been there before. Advertising is the first thing to go. If you're in advertising, I'm going to look you in the eye and tell you, you better be looking for a secondary job. Advertising on your company is the first thing to go. And then it just doors just start to closing, right? And so what you want to do is, out of those unfilled jobs, I don't care. You guys, I'm going to tell you again, until you get tired of hearing it. I didn't go to a expensive university. I didn't get a degree. In 2018, as a side hustle, I was driving Uber for hours upon hours, waiting to the surge and driving to 4 o'clock in the morning just so I will have more powder to invest. And I'm telling you, I am you. I'm not one of these gurus that came up. You can make $1,000 a minute if you buy my course. That's not me. Look at my Lamborghini in the house that I rented.
Oh man,
you know, that's not
I'm
me.
tired of that.
I'm tired of that. I'm you. And I'm telling you, I am you. I'm telling you, an 1,100 square foot house with 9 kids and 2 parents and my granddad living in the same house. I'm telling you, I did it. I'm screaming from the mountaintops. Please invest and be willing to do it long term. And I'll end by saying this. Take 5%. I would make it 10% of your income and invest it. And what I mean by that is, I don't want you to put it all in the market right now. Put it in your trading account. Because a bank, the first thing a bank does with your money is they get rid of it. As soon as it hit their account, they get rid of it. Because it's not an asset for them, right? It's a liability. So what they do is they put it in the market, same stock market we're talking about. They loan it out to businesses. They loan it out so you can buy a house. So that money is making money, right? That money is not in a vault back there like the old movies. So what you need to do is to find a period where you're willing to invest in you. Pay yourself first. All right.
Wow. I had one more thing on the chart.
Okay. Josh has one more thing on the chart you want to show. Go ahead, man.
I have to just briefly say that was inspirational, Mr. Jones, and very sincere. I want to just point out one thing for you guys to consider. I'd love for your thoughts on it. Larry, can you throw me into the charts?
I am. 1 second. Just keep talking.
All right. So just in a nutshell, from the top of this bull run to the bottom of that bull run was under 1 year, 365 days. Okay. And that led almost into another year before we got to the top of the next bull run. And it was 262 days before we got to the bottom. Now, depending on where you consider the top, because we had 2 peaks, but I consider the top personally in the first parabolic run up, which was right here, the 64,000. From that point to where we're at today, we're sitting at 424 days. So I'm only saying that it is plausible that this is the bottom. It does not mean that we're not in the bear winter and won't continue to be in the bear winter for another year before we get a run up. Mm-hmm. But if we look at the previous 2 bull runs in Bitcoin, we already hit the bottom within a year. We're a couple months over that year. What are your guys' thoughts on that?
I got an exact thought on that.
Go ahead.
Mine is super quick, Mo. This is how you find out, family. If we stay at 20 and above, this is the bottom. If we drop it, get ready to drop. That's it.
Good point. I like that, and because...
Wait a minute. Say that again, Kenan. Say it so they can understand clearly.
I'll say it again a little differently this time. Josh is on point with that. If you want to follow it in simple terms, if we stay above the 20,000, boom, we hit the bottom. We holding here, right? This is a support. But if we break it, we are about to drop it to the floor. That's what I'm trying to tell you.
What I like about that, what I appreciate about that is that, charts are great, but they're in the past. They do not predict the future movement, and we have no idea what's going to happen in the coming days.
And I will throw in there, guys, that I'm actually buying. I bought 15 Ethereum over the last week, and I'm planning on buying another 20 Ethereum over the next couple of weeks. So for me, seeing it down at this level, there's no way I'm not stacking up on this, because I am a 10-year holder. I am going to be holding this for a decade or more. This is the chance to create generational wealth that I am dedicated to hold for the long term. I'm not going to let some article or some video scare me away from something I think is so big as Ethereum. Ethereum is the future in my mind. We have a lot of good things coming up. Got to get through a few little hurdles, and then it's off to the moon. And that's how I personally feel. I'm not telling you to buy and sell. I'm telling you what I'm doing, and I'm loading the boat. I have well over 6 digits worth of income, and I should say funds invested in Ethereum, and I'm continuing to load the boat. And yeah, I don't know. I thought 1,000 would be the ultimate bottom. It touched down there, moved up, but they're right. It could continue to fall back to 600, 400, 300. But I'll tell you what I'm going to do. I'm just going to hold my nose and buy some more, because I know the next bull run will eventually happen by the end of 2024. And then I'm going to be all smiles. So dollar cost averaging will help to reduce the risk and get some of that variability evened out, if you will. We'll buy a little higher, a little lower, give us a little less risk. And that's the plan for me. Now, remember, stay well diversified: stocks, crypto, real estate, whatever you want to get life insurance as well. That's a whole nother article we can do. But in the long run, I do believe in Ethereum.
All right.
Me too. I think Ethereum's going to 10,000. I think Bitcoin's going over 100. It's just a matter of when.
I'm with you. I'm with you on that, Kenan.
I believe eventually Ethereum will overtake Bitcoin. All right. Bold prediction. All right.
Yep.
The flippening will happen down the years down the road. Okay. That's what I believe. All right. So, and I'm buying more Ethereum. I to be honest with you, I have all the Bitcoin I want. And I bought in heavy. I bought in during the dips. I bought some high, but I bought most during the low, and I have all the Bitcoin. So mine is different. If you don't have Bitcoin, I'm just going to say this. If you got, I said it, and I'm going to say it again. If you got Shiba Inu and Doge, and you have no Bitcoin, Ethereum, ADA, Solana, whatever, any of these, you're gaslighting yourself right now. All right? You're gaslighting yourself. My wife is telling me it's time to do a station break. Okay, I'm hitting. Hey, we got almost 4,000 watching, and we only have 2,200 subscribers, right? So, hey, Mo, talk about the links, and then I'm going to talk about you guys.
Oh, I got this, man. Come on. First things first, hit that like button for us. Hit that thumbs up. Put some comments in there. Put the mug, the oven mitts, the cat in there. Let us know you're out there. But hit that like button. It helps it with the algorithm. And more importantly, take advantage. I mean, let's help me and Kenan and Josh out here. Hit the subscribe button down below. If you don't got all 4 of us as subscribed, hit the bell, hit notifications, hit all for all of those. You're going to have a wide variety of very good fundamental and technical analysis coming your way, and it's positive. We're not out there making negative videos about other people. We bring positivity. We bring the good things, the light, not this evil stuff, and try to bash people. You're going to find out moving forward that goodness always kind of wins out. But with that being said, get some free cash too. We got the Moo link down below where you can get up to 11 free stocks. The best thing is put a penny in, you're going to get 6 free stocks. Put 100 or more in, you're getting 7 worth up to 17,500 plus a free share of Lucid. So great deals. And the Weeble link, put a penny or more in, you get yourself 6 free stocks. So there's your plug for you, Lair. It's almost like I did it once or twice.
There you go. Mo, hey, Kenan, Mo got a little preacher in him, man. I'll be like,
I see it.
Preach.
I do. I do. I honestly do. I believe in goodness. I believe in living your life the best you can, and knowing at the end of that life that people are going to be there, support you, be around you, and you made a difference in people's lives. That's my goal in life. It's not money. It's not this, not that. It's to have a strong family tie and have friends and family that care about me. So that's the overall goal.
I'm a quote.
I hear you on that, man.
I'm gonna quote some things. As the world turns, we got one life to live. And I'm gonna tell you the reason why I have Stock Josh here. What did I put on? Oh, I looked at the oven mutts and everything. I didn't look at his page. He's showing his muscles. All right, bro. I see you. Hey, somebody said I subscribe to everyone. Listen, I'm going to reiterate what Mo said. In my description, Mo talked about the 2 top links at the top, right? Weeble and Moo. They're both going to give you, for depositing 1 penny, I want you guys to do that today, all of us are going to help you with these apps, and we're going to help you make money, right? But under those two apps, I have these three gentlemen's links, right? Let me say this. Man, we know about the hit jobs out there. We know about the hit jobs. Somebody say, hey, man, somebody got a hit job on you. I was like, let me tell you something. Mo, if I'm fighting a giant and an ant is on my shoulder, do you think I'm going to stop fighting the giant and fool with an ant? I'm a giant slayer. I'm going to go slay the giant. You know what I'm saying? And
so it's a different world now, Larry. It's a different world.
I know, man.
We have the ability to use a lot of good things right now, this channel, our platform, to come together, create a community of like-minded, positive people. Bring that out and learn together. It's not going to all be in one video. What do you think?
Yeah. Hey, go ahead, Kenan.
I tell you this. Look, somebody said, Kenan, I seen these videos about you, Larry, Mo. Did you see some? I said, listen, to the BS, I'm blind, deaf, and dumb.
Come on, man.
I don't hear it.
All right.
I don't hear it. I don't see it. I got too much money to make. I got too many people to help. You know what I'm saying? Why would I focus on somebody being negative when I can focus on somebody who I could pull up with me? We trying to get to the promised land, and I'm trying to show you the way. That's so important to me. It's like this. During this recession, during this crypto winter and all of these things, I want you to take advantage. When we start to see bottoms or prices that you like, you might not even see the bottom. If you like Bitcoin at 20,000 because you want it, you know it's going to 100. I think it's going to 100. I can't tell the future, but then it makes sense if you got a long-term hold on that, right? Like Larry and Mo just said, even Josh, right? So it makes sense. But you got to think of this. I want you to think of every stock that you buy like a petition that says, I'm ready to own things and it's time to make a change. You got to see it as a petition for change. You buy a stock, that's another petition for change to change your life for the future. You're going to have more assets, and I want you to have more assets, and I want you to make a life that you don't need a vacation from. That's really what I'm looking for.
Say that again. Say that again. No.
I want you to make a life that you don't need a vacation from. This is important to me, and you could do that by investing in yourself and investing in your future. That's what I got to say.
Amen.
Man, let me tell you something. This is why I got Josh here. On my and it's not just me. These gentlemen said it too. You know what we started to do before these little hit jobs came out on these little pages is, and if I'm lying, guys, correct me. What did we discuss? We said that we want to use this platform and shine a light on smaller pages. Am I not right?
We're going to do that. We're absolutely going to be doing that. We're starting.
And that's why I have Josh here. At the last minute, I was like, you know what, Josh? I says, hey, man, come. I want you to come by. And that's what we're going to do. Because I want to, he started a page doing the roughest market. And I'm going to continue. Now, they won't be here, but I'm going to start at least once every other my turn. I'm going to shine a light on a smaller page that is doing good. We're going to keep it positive. 83% of the stuff that people worry about never, ever happens. You got one life to live. How you going to live it, right? With us three, and not just us, even the other guys that are good. There's so many great YouTube financial pages out there, a ton of them that I even look at, that are going to help you to make money. It's not limited to us. But why not have a good time? Why not us enjoy life even through the hard times? Because we know this is temporary. Do what's necessary right now. Like Mo said, hold your nose, buy through. Because what happens is, I've been through this before. I made my first investment in 92. I've been here before. I know what the end. I've heard this song. I watched this movie. I know that the ship goes down on the one movie, but just like a rom-com, I know they're gonna kiss and make up and live happily ever after. All right.
That's good.
And what I want to say is, listen, you guys do what's necessary right now and build on your happily ever after. We are going to walk you through this process. We have been walking you through this process. That's why Mo and Kenan is around. I'm going to tell you, I don't even look at a lot of pages no more because it's so negativity. If I want to go
Yeah.
happy, if I want to be happy and I want to look, I know I can go to KENAN's page and get positive. I know I can go to Stockmore's page and be positive, learn something, make some money, and be positive. That's it. That's all I want out of this life. Hey, one last thing, because we at an hour. I said I wanted to be under an hour. Bam! I just hit an hour. I want Josh to look at the S&P and just think about the stock that are in the S&P. Pretty much most of the stock y'all in. A lot of the stock y'all in. It's in the S&P 500. Let's look at the S&P 500 and let's look at some levels of support. I had a chart here that I had, but Josh charts looks way better than mine. He's way better at charting than me, so let him do it.
Well, okay, I'm going to keep it really simple on the S&P 500. If you look at, we've had a historic line that has sort of worked as support over time. I'm going to draw that out. It's worked as support, and it's also been broken through, and then it's worked as resistance. We have played with this line, I would say, all the way since 2015. And when we broke beneath it this last time, it gapped down. It really kind of, it really respected that line in that it broke it and it fell hard. Where could we go from here? Each time we have had a major pullback, we've gone and tested a previous level. And right now, the previous level would actually be around the 3,600 mark. And really, guys, that's only going to bring us, so the last pullback was 35%. If we came back and retested the previous level, which happens to coincide again with that 200-day weekly moving average, that would only be, let me get a timeline on here, price range, that would only be 26%. So I'm just saying that there is a support at 26%, and it would be testing the previous level.
All right, all right. And any closing remarks on that, gentlemen?
No, it's good.
Yeah, I say, you know what, everybody who showed up today, we appreciate y'all. What we need you to do is make sure that you keep coming back to these kinds of things. YouTube tries to suppress it.
Yeah.
When you see Mo do this in 2 weeks, me do this in a month, make sure y'all showing up to these things, because you notice when you hit the like button, we got everybody to come into the building. What's going on with YouTube? There's a lot of stuff in the background that y'all may not be privy to, but they're playing around with the numbers. I was talking to Mo and Larry about this earlier, and Josh too. There was a YouTuber recently, and he got a video out, 27 million views. They gave him not even 27 million views. He got that many views in a month, and they gave him $800. Let me tell you, that's so abnormal for YouTube. But what's going on? It's becoming the creators versus a YouTube kind of thing. But the only way that we could even be seen and get what they call impressions by showing the thumbnails of different people is if you like the video, if you return to the video, if you don't skip the videos and things like that. And what it does is it encourages YouTube to show it to other people who need to see it as well. If it's helping you out, just imagine it's going to help so many other people out, just getting information that they could just come on here and just watch it for free. So that's what I wanted to say on that, family. Again, it's not just us four, it's us 4,000 of us, all 3,400 of y'all, and us for all of us together. We really doing this together, straight up.
Yeah,
Hey,
I just
man,
want to thank everybody as well. I just want to thank everybody for who subscribed, who came here today, who's been a part of this journey for all four of us. You know, it's a long journey. It's not always easy, especially when the markets are red. But you know what? This is right now makes the millionaires moving forward. When you have prices depressed like they are, this is the time that can create future millionaires, or just, you know, whatever the number is you're shooting for to hit that financial freedom you're striving for you and your family, generational wealth. These are the times when it's deep red, FUD everywhere, you know, fear, uncertainty, doubt, everything's crashing. It's obviously one of the best times when you look back on history to acquire those assets you're trying to hold for the long term. If you're day trading, well, have fun. The volatility is off the charts. But if you're investing long term and the market's down this much, in my mind, this is a good time to acquire slowly but surely for that long run, and we will see positive days moving forward. And I do appreciate Larry bringing me on too. I really do appreciate it.
Man, I appreciate having you, brothers. That's for sure. So read this one. I have a video. This person had a video that's been processing for over 8 hours.
That's my dog. That's Clay.
Yep, you guys.
That's my guy.
I'm telling you, I had videos up, and one of my videos, it took 2.5 hours to process. And it was something that I wanted to get out to you guys instantly. And then and then when it got up, it finally got up, man. It's like you out. Like I had other things to do, man. And so we got a lot of challenges. I want you guys for Stock Mo's page, Kenan Grace page, and Stocks with Josh page, make sure that that notification bell is checked. And even if it's checked, this is what I want you guys to start doing. If the day goes by and you haven't seen a video from Mo, Kenan, or Josh, just go to their pages. Mm-hmm. And if you see a video up, then watch it, because it helps us to stay alive, staying alive, so we can be there for you guys. Hey, we're going to cut it off right there. You got anything to say in part, Josh?
You know, I'm only going to say that I just am honored and humbled to be able to chat with you guys tonight. Each of you guys are leaders in your spaces, on your platforms. You've influenced a lot of people. I think there's more here than just money that's being made. There's a positivity that I hear from each of you. I watched both of you guys' page, and it is tonight. There was inspiration tonight. There was a lot of positivity, and I loved it. Thank you.
Thank you.
Appreciate you, man.
Hey, we're going to leave it right there. Listen, gentlemen, why don't we say this with the people? You guys want to get us back on track and for schedule purpose, you guys want to do this again next week? And then go from 2 weeks after that?
I am going to be at Studio C, so it's possible. It's not,
Okay.
it is possible. It is possible.
And that'll get
Even
us back on schedule. Just so y'all know, audience.
You know, I love
schedule.
doing this.
Yeah.
We used to talk about doing it once a week, remember? Back in the day. And,
And then every 2 weeks after that,
Yeah,
I just wanted to get us back on the schedule because of my schedule. It threw it off. So
I will be able to tell you that on Saturday or Sunday, but let's plan for Wednesday.
Okay.
And let's plan for doing this again.
Yes.
And you know what? If Josh, you're around over there, more than welcome. I might find somebody to bring on myself. I think it's fun to have some other YouTubers on here.
That is cool.
I agree.
That is cool.
I really like Josh. I really, really liked your technicals, dude. You're fire, man.
There you go.
Thank you, brother.
Hey, I'm gonna end by saying this. Listen, soon as this video ends in a second, go down to my links, right? Matter of fact, before you even click the Weeble and the Moo, I want you to go to Stock Mo, Kenan Grace, Stocks with Josh, subscribe, like their last video, and hit the notification bell on all three of their pages. That's what I'm begging you to do. Then you can come back and click my links and download below. All right, good people. And I'm going to leave it right there. Hey, you guys know I love you guys. And I'm going to speak on behalf of all three of us. We love and appreciate each and every one of you, because without you guys, we cannot do what we do. Okay. And when we all started this, you guys don't have no idea that there were months where we were making $75 for the month, and we were going every day. And so it's been a drive to get us to where we're at. I'm thankful for where I am, but I am doing, Kenan Grace is doing, Stock Mo is doing, Stocks with Josh is doing everything we can to help you guys build generational wealth. We love you guys. Live, love, laugh, and learn. We're out.